Welcome to the latest edition of The Bull, the Bear, and You as we navigate what is happening in the economy and we take a look at investing. I'm Stacy Smith, and I ask that you say that you happen to like this program or subscribe to it on whatever platform you happen to be using. The Fed will be holding its first of 8 scheduled meetings this year, beginning on Tuesday, and then on Wednesday it's going to announce what it's going to do about interest rates. We'll take a look at that. Also, we'll talk about what is happening in the stock market and a discussion about China and whether it is destined to become the most powerful country in the world. A special guest has some doubts. It is coming up in this edition of The Bull, the Bear, and You. And with me to talk about the economy and investing is my panel of financial advisors and experts, and they are Frank Rossetti of HF Management Company, Kim Forrest of Boca Capital Partners, Michael Godwin of Fergasso Advisors. Kerry Coghill of Coghill Investment Strategies could not be with us today. We will briefly discuss the markets and the Fed a little bit later, but first, the Trump administration, as you know, is warning of imposing tariffs on a lot of countries, and the most significant, perhaps, of those countries is China. And joining us today also is Dennis Unkovic, who knows more than just a little about China. Dennis is an international lawyer, business consultant, and author. His travels in helping businesses negotiate through labyrinths of rules and regulations have been many, including 64 countries. Now, one area of expertise has been Asia, especially Japan and China. Now, Dennis has written a new book, which I'm going to show you right now. It's entitled The Fragility of China, Breaking Points of an Invincible Regime. Dennis, welcome to The Bull, the Bear, and You. Appreciate having you here with us.
Stacy, thank you for inviting me, and I look forward to talking with you and this serious panel up there.
Yes, very serious panel, you'll find out. We have a few questions. I'll start, and then my regular panelists here will have some questions for you inside as well. Now, inside the cover of your book, it states that many in the West believe that China has an invincible regime, and it will become the most powerful economic and military country in the world. However, you don't necessarily agree with that opinion. In fact, you believe, as your title of the book says, that China is fragile. Why?
Good question. I have a couple of answers. The most important thing is the Chinese economy, as you know, Stacy, between about 1990 and 2010 or 12, grew at about 8 to 10 to 12% a year. It doubled and doubled and doubled. Since Xi Jinping took power in 2012 into 13, China's economy has really gone down significantly. Last year, the economy grew, 2024, at about 5%. Now, the Chinese sometimes do things with their numbers, so maybe it was a little bit more, a little bit less, but that was less than it was in 2023, and this year they're predicting it's going to be 5%. For an economy, Stacy, that is so large, you need more than a 5% growth rate because China lacks a lot of things. Now, in my book, there are a couple of things I talk about. One, I think would be surprising to most people. China has a significant demographic problem. Basically, there are not enough children being born. In the 1980s, they put in a one-child policy because at that time, the population was higher. Well, the population has dropped significantly, and today, China, a little bit like Japan, is producing too few children, so its economy is dropping. Why is that a problem? Because in China, people are getting older. They tend to retire at age 60, at the latest 65, many in their 50s. And so you have an older population without a safety net underneath it. That's number one. Number two is their real estate is very, very bad. A third of the Chinese economy today is based upon real estate. The biggest loss of a company, the second largest loss of a company was announced for a company called Country Garden. They went down at about 25 or 26 or 27 billion dollars last year, and they're not able to build things. So they're literally hundreds, Stacy, hundreds of thousands and maybe millions of units, nobody's really sure in China, that aren't being built. One other thing that I think we can talk about briefly, then I'd like your questions, is the global supply chain. What Xi Jinping did, like his predecessors, is let's make China the largest manufacturing powerhouse in the world. And really between 1990 and 2012 or 13, they did that. One of the reasons is, and I'll be critical of American companies here, they said, oh, I can do it more cheaply in China. Let me take everything over there. We're Pittsburghers here, and we've seen what happened to a number of our industries because of this. It's been estimated America lost between 8 and 12 million jobs. I'm talking about manufacturing jobs, all right? We've created a lot of other jobs, and that's a really serious thing. So the supply chain was dependent upon China making it cheaply and shipping it around the world. I don't need to tell Kim or Frank or Michael or you what happened during COVID. Clearly the supply chain collapsed. And the supply chain, in my opinion, is still extremely fragile. One of the things we see happening now is what's called onshoring or reshoring. A lot of the companies that said, I'll either make it in China or I'll make it in Mexico are saying, maybe I should be back here in the US. So those are just three examples of where China's facing some very serious problems.
Okay, great. In your book, you call some of these issues that China is facing max trends, if I'm not mistaken.
Yeah, what I did is I wanted to create a word, and it's, as an author, you always want to create a word, right? That's sort of yours. But I came up with max trends. These are external factors that you as a country or you as a president or a leader cannot control that really affect where the world is going and so where yourself is going. Take a look at China. We just talked about their demographic problems. What do you do when you have too few children, too many, that's the wrong way to put it, but too many people who are older and not working? Your economy goes down. And these max trends are what I think are China's Achilles heel. Now, do I think the Chinese are smart? Yes. Do I think the Chinese really want to take over the world, both militarily and economically? Yes, but it's not a foregone conclusion. But unless we here in America take China more seriously, it is possible. That's why I wrote the book.
Okay, great. All right, I'll open it up to Kim or Frank or Michael to ask a question. Go ahead.
Please. I'm like so excited. Thanks for being here, Dennis. So my first question is maybe a hard question, but whatever.
How about an easy one first?
No. So even though I'm an equity analyst, I've become to appreciate the power of debt and how insidious it is. And it seems like I don't know what the answer is for China's debt. Unlike us, like us, they've moved a lot of it to the public balance sheet. But this real estate thing where none of it made sense to me. With a declining population, you're going to build more apartments. So we have less people, but okay. And then that is going to be a store for wealth for many in the middle to upper middle class to buy an apartment, buy multiple apartments to stash cash. Never made sense to me. So how do they get out of it? Do you know?
Let's talk about debt to GDP ratio. In other words, in the United States, our debt's about 139, whatever, okay? Mm-hmm. Our GDP's about 100. What do you think China's is? China's is 300 to 100, or
Whoa.
3 to 1.
Right.
No kidding. That is a really good statistic. And so as much as we worry in this country, Kim, about what's our GDP? Are we spending too much money? Like you, Kim, I think the government could be more efficient. Yes, we're spending too much money. But the Chinese are in a much worse position than we are. And so as you look at the construction area, the real estate that you said, the average Chinese person until the 1990s didn't really have anything. I mean, they were very depressed. But as their economy grew, their middle class, which is estimated to be, Kim, about 400 million people out of 1.2 or 1.3 billion, they had some extra cash. And so once they had a car and they had refrigerators, they had the opportunity for the first time to invest in real estate. Now, everybody in China doesn't own real estate. The government owns it. But what happened in the 90s is the government said, I'll give you a lease, or, I'll give you the right to own this piece of real estate. And no, you'll live to be more than, 75 more years, but I won't. But, when you're in that situation, you say, okay, that's a pretty good investment. And the government said, we'll roll it over. So technically, you can't own land, but you do. So what the Chinese people did, beginning in the 90s and 2000, we all know what happened in 2008. We can talk about that later. But they invested it in real estate. So it's I have read, and I think it's true, about 75% of what the average Chinese person has, their nest egg, the money that they've saved, it's not in the markets. It's in real estate. So what happened in 2019, 20, whenever COVID came along, there were real problems with the real estate market before then, Kim, but they got it much, much worse. And so the value of real estate has been dropping, and there are two really big companies that have gone bankrupt. One's called Evergrande, the other one's called Country Garden. Both have lost, I believe that Evergrande lost something like $200 billion debt versus what it really has. It's in bankruptcy. Country Garden in the last, I think, 2 weeks has really gotten a lot worse. And so that's the problem, Kim. And is there a good answer? The answer is no. But if you're a Chinese person and all of your savings are, Kim, are in this piece of real estate, are you going to go out and borrow money? Are you going to be a consumer? So the Chinese consumer has essentially closed their wallet and said, I'm done. I'm just going to sit back, and that's where China is today.
Interesting. Thank you.
That was a hard question. I hope I answered it.
Yeah, I want to follow up on that. So the Chinese government did not attempt to bail out this particular situation?
The long answer to your question, Stacy, is no.
Okay.
Xi Jinping does not believe that the government should take. There are two kinds of developers in China. Some are government-owned or government-controlled, and these are private developers. And so far, the government has said, and Xi Jinping, no, I'm not going to do it. They've made some efforts, like they've said in certain circumstances, if you want to borrow money to invest in real estate, I'll drop the interest that you'll be charged by the bank so you can buy more real estate. You don't need to be a genius to figure out how well that did. And so Xi Jinping so far has not focused on revitalizing the economy because a third of the economy is really in the hole. What he did is another third of the economy is their manufacturing, okay? That's sort of what it is. That manufacturing has gone up a bit over the last 18 months. And so if there's anything that has kept the Chinese economy from essentially being zero, it's that their exports are going up. But we have somebody who's a new president called Donald Trump, and Donald Trump's been talking about something called tariffs. And if the tariffs are put in, and we can talk about that later, I guess, that's going to be a real problem.
We do want to get into tariffs, but go ahead, Frank.
I tend to look at things through the lens of history, Dennis, and I go back maybe 40 years to when we were all worried about Japan taking our country over. And they did a similar thing where they supported their industries, borrowed a lot of money, and as you all know, if we look back at the last 40 years, until recently, Japan went into a flat to down multiple decade thing. Do you think that we're looking at the same sort of situation?
Frank, you and I may be the same ages, so I remember those times. From 1986 to 1992, Japan went through what's called bubble period. And there was a guy named Ishihara who wrote a book called Japan is Number One. And there were other books that came out at that time. I was asked to write a book, which I did in 1989, called America no Iradachi. I don't speak Japanese, but that basically means America in a great state of irritation. We were worried about Japan. Frankly, I was not worried about Japan at that time because Japan has about 65 million people. Maybe I'm off by a little bit. And we have 330 or so. The Chinese have 1.2 billion. So I don't think in the short run that China will have the same total decline that the Japanese did, because the Japanese after 1992, you all were the experts, I'm not, but their Nikkei, or their stock exchange, didn't get back to 30,000 from where it went down to like 8,000, I think, until last year. I think I'm right on that. Okay. So if I am, the money that's being invested in China today, Frank, isn't so much in their stock markets because it's stuck in the real estate. But what I do think Japan saw that you're beginning to see in China, Frank, is deflation. And I think that deflation is not necessarily as extraordinary what went on in Japan, but it really should worry the Chinese, because when we talked a few minutes ago about $300 in debt versus $100 in GDP that you have, that's the real problem. But if China does not reverse significantly, could China look like Japan did in the 90s? Yes. I just don't think we're there yet, Frank.
Okay, you brought up a word, deflation. We're worried about inflation here. We don't have the extent of the global economy we had just a few years ago, but it's still a global economy. Do you think that this potential deflation in China may start bleeding into the rest of the world, including us?
Yes. I could give you a longer answer, but deflation is something that is a global phenomenon. And as China has a $17 trillion economy, and we have, what, a $26 or $27 trillion economy. If that number two economy, bigger than Japan and Germany and the rest of the world, has serious deflation, it has to affect us, because we will, in fact, not be able to get the same value that we did before. That's a really tough question, but that's the best answer I can give you, Frank. Do you agree?
Do I agree? I tend to believe that it's more like a bathtub full of water. And if you take the water out of one side, the other side doesn't stay high. It all goes down together.
And that's why we still are in a global economy. Now, whether we'll be in a global economy 10 years from now, depending on what happens in the next 4 years, we'll see. But yeah, deflation should be a serious concern, not just for the Chinese, but for us. And our inflation rate, honestly, is not that high, really. I remember in the 1978, when I bought my first house, the interest rate I got then was 17%. It was 18% at the time, but because I knew the banker, he said, I'm going to do you a real favor. I'm going to give you 17%. And that's not a joke. That's absolutely true. And so I know we have inflation today, and it's something to be concerned about. But when I read about the fact that if real estate, goes from 6%, let's say it's there now, to 8%, you're going to have all of these defaults. That's something that's very worrying.
Michael.
Well, that is a problem. But I look at the insurance industry in light of all these disasters, and I look at this housing market being as expensive as it is, and I look at nothing but the other side of that mountain, and that to me is what we need to be concerned about here.
And when you see what's just happened in California over the last several weeks, and in Florida before that, insurance companies simply are not going to insure certain parts of the country no matter what the rates they want to get, because at the end of the day, they have to balance out. And so that is something that adds to the cost of a home, and I don't know. I agree with you, Frank.
It's the risk of owning it.
Exactly. And so I think a lot of people will begin renting. I think rentals will go up, and when the average house to cost, we all have children or grandchildren, and we say, okay, we can afford a house because we've had this run up over the last 8 to 10 to 15 years, but can our kids or grandkids end up buying houses? They're pretty high now, and so the answer is, I don't know. It's a real problem.
Right.
Mike, we haven't heard from you yet. You got a question?
Sure. Yeah, I'm gonna pivot if you don't mind, Dennis,
Absolutely.
and to the kind of the news of the hour. And you will be forgiven if you've never heard of DeepSeek before this weekend, because I had never heard of it before this weekend as well. But the rise of China's AI infrastructure is sort of the news of the hour, and it's shed a ton of money off of NVIDIA and a lot of the U.S. artificial intelligence companies. China is saying that their DeepSeek is just as powerful as OpenAI and ChatGPT and can be done at a fraction of the cost. Now, and I think that's a big if that is accurate, how do you see this playing out in the geopolitical forum?
That's your easy question for the day, right? Seriously, let me give you a little background, and then I'll try to answer the question. Xi Jinping, when he came in 2012 and 13, he had two things that he wanted to do. Number one, he wanted to build up their military, which he has. That's another topic. But secondly, he wanted technology to be the future of China. So in 2015, he put together a program called China 2025. And in China 2025, he took about 20, I think they're 24 or 25 particular technology areas and say, this is where we're going to spend money, this is where we're going to focus on. And in fact, he did. We're now obviously in 2025. One of the areas that Xi Jinping back then, was looking at was AI related technology. I have great respect for the Chinese, and I worry because today I believe about 70% of the technology in the world, Michael, is Western based, and the companies you just mentioned are obviously in the forefront of that. What the Chinese have been doing really from the time Xi Jinping came in is trying to shift that balance. And so my long-range answer to your question, then I'll talk about DeepSeek in a second, is that China would like to have a two-technology world, all right? We'll call it Western technology et al., and we'll call it Chinese technology overall. That where, if we had this, if you had me on in 5 years from now, Stacy, and we had a topic, I think we would talking about how or what is the balance, Stacy, between Western and Chinese technology. Clearly the Chinese are trying to build that up. I think they're making a mistake in ignoring their economy. We talked about that a few minutes ago. But I don't know whether or not DeepSeek is what they claim it is. We'll have to wait to see. But it should be absolutely no surprise to NVIDIA or to any of these other Western companies that this was coming, because the Chinese, a little bit like the current president we have, oftentimes tells you what they're going to do in advance. And I think they did. Am I surprised that the markets have reacted to this DeepSeek announcement? No, I really think the markets should, because if you have a technology, instead of taking 10 kilowatts per hour, you got another one that takes 2 kilowatts per hour. You don't have to be a genius to say what is more attractive. And Michael, that's about as much as I know about that particular thing, because like you, I just sort of became a little smarter over the weekend about it. Do you want to follow up? But that's my best answer.
No, that's pretty helpful. I mean, again, there's a lot of ifs out there right now regarding this, and I think a lot of it will play out over the next few weeks in the markets for sure.
But should we be concerned? Yeah, we should be.
Well, let me interject this related question then. If the Chinese want a Chinese technology base and then there's a Western base, what will that do to U.S. companies that are, let's say, in Taiwan or any of these others that are making these chips and whatever else is involved in making AI?
What's going to happen on a broader basis, Stacy? You're going to have countries, not companies, but countries deciding, where do I put my economic relationship or make my primary economic relationship? The U.S. has been successful over the last 20 or 25 years in getting a lot of the countries in Asia, now whether it's Singapore, Malaysia, or Indonesia, or India, to look at Western technologies. But if this is in fact something that is really significant in the AI area, you're going to be putting a lot of world leaders in the position where, as I talked about a few minutes ago, do we have a two-technology world? And I think your question was, what does this do to U.S. companies? Well, you look at the U.S. companies that have put a big bet on China. There's a company who makes an Apple phone. I forget what their name is. I do know what they are. But where are most of those things being manufactured? They're being manufactured in China based upon those technologies. That could really be a major impact. Now, China, if it goes too far, I think it can tip the other way. But I take the Chinese very seriously. They're 4 times the size of us, and they apparently have a leader who's willing to borrow unlimited amounts of money to create technologies that are Chinese-based. And to me, that's a concern.
So can I drop a little information in here?
Please.
So DeepSeek, oddly enough, is an open source company, which means they are publishing their data and publishing how they're doing things, which I think is kind of interesting. So 2 things. I'm a skeptic of, anything that comes out of China numbers-wise with respect to financials, and also with technology. People are playing around with it right now, but I think it would be interesting, or it's going to be interesting, when somebody tries to duplicate how they did it and if they can make it work. And if they've left out some kind of secret sauce, I'm pretty sure, because this is just math models, you can reverse engineer it. So I'm more interested in somebody releasing DeepSeek 2, or Son of DeepSeek, or Western DeepSeek, to see if it really can do what they say it can do. So that's freak out number one. And freak out number two, are the reason why the markets are freaking out is because I think they grossly overestimated the rewards that chip companies and people building AI was going to get. I mean, it was just so over the top. And even the amount of energy that people were saying it needed, we don't have. So all of it was kind of built on empty promises that it could even be built. So I think some of that correction today in particular is that unwinding, that people are like, well, hey, there's this cheaper technology, but also, are we really convinced that NVIDIA is going to be able to ship that many chips, and they're going to be able to be plugged in somewhere, like in the next year? And I think the answer was no.
That's really interesting. As a lawyer, a lot of money has gone into AI to supposedly help us lawyers to be more efficient. I probably get 10 solicitations a day saying, oh, here I am, I'm an IT company, I can help you, whatever else it is. The legal business isn't that big, okay? Whether it's 20 or $30 billion a year, I don't really know, but it's not that big a market. But when I see the amount of money that's been put into individual firms, AI, IT firms, to, quote, help my industry, there's no way there's enough money that the lawyers have to spend to do this. And so I agree with you, Kim, that I think there have been a lot of very aggressive, ambitious investors who said, oh, AI, this is going to be the next whatever else it is, I'm going to invest it. I think there's going to be a shakeout in, I don't know AI like you guys do, but it's, I think, a time for a leveling, which I think might not necessarily be bad.
Let me throw this one out, and that is, can we trust DeepSeek or anything that's coming out of China? The reason I say that is they've already determined that if you ask DeepSeek any questions about the Chinese leader or the economy or other things, it equivocates. It doesn't give you the answer that is probably true.
There is no company that is Chinese, true Chinese, that is not directly, if not governed isn't the right word, but influenced by the Chinese leadership, by the CCP, the Chinese Communist Party, Stacy. And so what you tell me doesn't surprise me, and you'll never get anything out of China that the central government doesn't think they want to come out. And in this country, we can still criticize the president, or at least we could, whether it was Biden or Trump or something else, and there are no real important reactions to that. In China, you simply cannot criticize the government significantly and expect to remain a viable company. And so your point about is, can you ever really trust what's coming out? The answer is, they won't necessarily not tell you the truth, they simply won't tell you. Is the old, what's the most famous thing? No comment, no comment.
No
and
comment.
I think that's what you get, Stacy.
And then on the flip side of that is with TikTok, of course, the U.S. government believes that it's gathering information on about U.S. citizens or companies or whatever it might be. You'd have to suspect then that this DeepSeek might be able to do the same thing.
Yes. The thing about, there are two things about TikTok that I think are worth mentioning. One is, as they collect data on individuals, they learn a lot about the country and what it is. There's another thing is that TikTok can be used, because it's controlled by the Chinese government, for a propaganda machine. Black is white, white is black, up is down, and down is up, that kind of thing. And there's very little control over that. I frankly think that Congress got it right when they said, look, let's stop this unless you sell to a non-Chinese controlled ownership. that is really independent of the Chinese, we shouldn't have it here. I basically think the Congress got it right. Now, current President Trump was against it 5 years ago. I think he wanted it shut down. Now I understand he might be in favor of it. So I don't really know where things are going, but it's a thing in process, and it'll be interesting to watch.
Well, we have to bring up the one word that you brought up earlier and said we might be talking about, and that is tariffs. And what will be the impact, in your estimation, on China, and what will it do in retaliation if the president does impose these tariffs?
I think
we already have tariffs, by the way, so I guess in a lot of cases it would
we
be
have
an
like
increase.
25% tariffs, and there's some higher tariffs on other things. But the one thing in writing my book on China, I have great respect in a certain way for Xi Jinping. He is not a man that will be pushed around. Number two, he has no localized Chinese opposition. So I do believe if President Trump goes through saying, I'm going to put, at one point he said a 60% tariff, I don't know what he's saying now, I do believe that the Chinese will respond to that, and with counter tariffs. And so I think tariffs are like anything else. There's no one thing in life that's 100% good all of the time, all right? The U.S. for years protected its steel industry with tariffs, not just against China, but around the world. To a certain degree, that had some level of success, and yet in the long run, the U.S. steel industry got weaker because it didn't have as much competition. Right now, Nippon Steel has made an offer, we're in Pittsburgh, to buy U.S. Steel. It's been approved by the U.S. Steel shareholders. It's been approved by the board of directors. And it's something that I think would be good for America because it would bring about $3 or $4 billion worth of new technologies here to Pennsylvania, to the United States, which I think is good. And so tariffs on a limited basis for a way to achieve a certain goal might make sense. Tariffs across the board saying, I'm going to put 60% tariffs on everything coming out of China. I think China will react, and I think the implications will be highly economic, and they'll not just affect China, but they'll affect us. That's a really hard question. That's the best I can answer it.
With those tariffs, I mean, China does hold some sway over the rest of the world. I mean, I think that we continue to gravitate more towards alternative sources of energy. You know, China has something like 60% of all rare earth minerals and exposure in their country. They produce 60% of lithium batteries, et cetera. At what point does that become a problem and they kind of hold that over the heads of the rest of the world?
They're already doing that. They have put rare earth metals, Michael, aren't as rare as you think they are. You know, they're sort of around the world. The problem is they have to be extracted from this whole, group of other minerals. It's the refining of the minerals to get the lithium or the other rare earth metals you want. The Chinese were brilliant because what they did about 25 years ago, they decided to set up about 600 miles north of Hong Kong, an area where they refined rare earth minerals. And that's where the West is really going to get stuck because we have rare earth minerals in Arizona and in Utah, but can we refine them? At the current time, we don't have that capability. So the Chinese have already made limitations on certain minerals coming out of China that they say have a dual purpose. In other words, military and, non-military. And so I think that story has already begun. If President Trump puts 60% tariffs on tomorrow, I would expect, Michael, shortly thereafter, your prediction is going to come true.
So, Dennis, is the reason why we can't produce rare earth metals here, is it because of regulation or is it because of technology and knowledge?
It's not technology as much. Could we refine these metals? The answer is yes. But we have environmental laws because I know a little bit about gold. When you want to get gold out, you put in arsenic, right? You
Yep.
put in the arsenic and you pull out the gold. Not that simple. Where does the arsenic go? It goes in the water. Refining rare earth minerals is the same kind of thing, except you're doing it on a broader base. I think there are some entities now that are being set up in the U.S. to move toward refining. But if we do not have that capacity, there are a lot of rare earth minerals in Africa, all right? We can get them there. But the key is, how do you refine them? Can you refine them? And can you do enough of it to support a domestic U.S. industry? As Michael said a minute ago, lithium is a good example.
Yeah, I don't want to go too much longer here because we're already almost 35 minutes. But Dennis, I do have two questions for you. Maybe they are related.
These are easy ones, I hope, right?
Yeah. Yes.
Okay.
That you bring up in your book, and one is this surge of nationalism across the world, and what that may be, how that might affect U.S. and Chinese relations and the economies. And then second, the military buildup that China is doing, and is that of a major concern?
Let me take the second one first.
Sure.
The Chinese have built up their nuclear arsenal by about 5 times over the last 10 years. They now have significant numbers of nuclear weapons and ICBMs that are able to deliver them around the world. They're third. We're number 1. Russia is clearly number 1 or number 2, and they're down here. They might have 1,000, we have like 5,000. But the Chinese have done a very strong job in building up their military. What I consider to be even more serious in the short run is they've built up their navy. It's called the Plan, P-L-A-N. But the Chinese Navy has about 400 ships now of various sizes. The U.S. has about 320 or 330. Now, our ships are more advanced. Most of ours are nuclear, but the Chinese have the ability to create great numbers of ships. Our problem as the U.S. is we have what's called a blue water navy. We can send it out around the world, but we have some problems in the Middle East now. We have problems in China, and so we're all spread out like this. But the Chinese are focusing on building up their navy, which is why in the South China Sea, if here's Hong Kong and up here is Shanghai, this whole area, the Chinese have taken it over, and that's a direct threat to Taiwan. And Taiwan's another issue, we could talk about now or another time. Your second question, you wanted me to focus on nationalism.
Yes.
The thing that I think is interesting is nobody really has recognized the most important impact, other than health, on us that came out of COVID is countries figured out, I don't make my own drugs. I don't have masks. I don't have all of these things I need. And so I think countries for the first time are saying, what things do I really need to produce here? Whether I'm British or Chinese or American, it doesn't matter. And so what that's done is it's had more onshoring or reshoring for companies that were overseas. And that, I think, is going to essentially constrict, or at least it's going to change global trade, because before it was like, you make it cheaply, you make it. You do this, you do that. Everybody will exchange. I think those days of an increasingly global economy are going to, they're not going to reverse, but it's going to change more, to be more confined, if that makes sense.
Okay, great. Hang on, Dennis. I just have a couple of questions for my regular panelists here, and then we'll wrap it up. But if you don't mind hanging on for a second.
Thank you.
So this goes out to Kim and Frank and to Michael. First of all, the Fed meets this week. Any anticipation on what they might or might not do at this point?
Wow, can you remember like a month ago when the Fed was all the market thought about? And now it's like a passing whatever. There could be a Donald Trump news conference that just upsets that, right? And we don't even hear from the Fed this time. I'm kidding, kind of. No, I think they're on pause for right now. Even everybody's kind of indicating that prior Fed participants, current Fed presidents, they're all leaning towards, treading water at this point. This morning, the Chicago Fed came out. They have a little monthly thing that shows whether The leading indicators are improving or sliding backwards. And it looked like December is still showing an economy that's growing. So I think the Fed has all the cover not to do anything.
Okay.
Yeah, agreed. Fed is almost virtually guaranteed to not raise or cut rates this meeting. Again, I still think there's more of a. I think the market is discounting the fact that the Fed might have to raise rates at some point in 2025. Do I think they'll do it? Probably not, but I think the market is probably not giving that enough credence.
Okay.
And to add one more thing, that when he talks on Thursday, I guess he'll start talking about being data dependent again, and the data is saying do nothing.
Okay, good. One final question for you. Given the way the market plunged after the opening today because of this deep seek and NVIDIA stock, I can't remember how much it lost, but at least 10%, I believe. You guys are all long-term investor styled, and so does this kind of news disrupt what you think we should be doing or an investor should be doing at this moment?
I'm going to go shopping today.
For stocks or clothes.
There's
Probably
four-
after the market close, I'll run through the sales online, but while the market's open, I'm going to be buying. Well, I don't know what I'm going to be doing. I'm going to be shopping. I'm going to be looking for companies that I've wanted to own that were too high.
And remember, there's 4 words, Stacy, that are always true: buy low, sell high.
Yep. Very true.
No, I mean, Kim is a much braver person than I. I'm gonna sit. I'm not gonna be shopping today for any stocks right now. I mean, is the market? I mean, you got to remember how much NVIDIA has come along the way over the past few years. I mean, it's had a meteoric rise, and you're right. It's down 15% today, which is an astronomical number for a company that size. It's lost 485 billion with a B today in market capitalization. So. I think a lot remains to be seen on how this DeepSeek AI infrastructure really plays out. I mean, but there are a lot of unknowns and what ifs, and I do think, to Kim's point, maybe that the market is overhyping something that is an open source data stream out of China.
All right,
And,
great.
and it's not just all NVIDIA. There's other things that are on sale.
Right.
Just saying.
Very, 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 very true.
Yeah.
We just have gotten so accustomed to just talking about NVIDIA when it comes to AI that's truly not fair.
All right. I want to thank all of you for joining me, Kim and Frank and Michael, my regular panelists here. And Dennis, a special thank you to you for joining us today on The Bull, the Bear, and You. Very insightful, very good points, and I think that a lot of people are going to learn a lot from that. And once again, Dennis's book is called The Fragility of China. There we go, right there. And it is Breaking Points of an Invincible Regime.
Thank you for having me, Stacy. Thank you.
Thanks again for joining us. We hope that you join us again for the next edition of The Bull, the Bear, and You.